You may not realize it, but Tyler Technologies has one of the most consistent and overlooked seasonal uptrends in the entire tech space. With a stunning 90% win rate over the last 20 years, the company shares have historically delivered robust gains from mid June through to early September. Let's analyze the data in a bit more detail. You can see Tyler Technologies averages a return of over 10%. The maximum gain has been a stunning 27.51%. And look at the maximum loss, it's relatively modest, 4.78%. And even the max drops, you can see that they have maintained underneath 10%. So, this is not a high beta tech rocket at all. It is a steady institutional favourite with surprisingly low downside variance. The maximum drawdown in this pattern is only 4.78%. So, when you look at the cumulative profit, it's very strong, unidirectional, really is an excellent seasonal pattern. And as investors, they're rotating between AI hype names and more defensive tech. Tyler just stands out for a very different reason because it's got these reliable government software as a service contract. Their first quarter 2025 revenue grew by 21% year over year by the addition of new software as a service provision. So, with US infrastructure spending continuing and there's lots of digital transition efforts underway, this seasonal tailwind could coincide with strong structural tailwinds. You might be watching Nvidia, Apple, and NASDAQ closely this summer, but don't ignore the quiet performance. Technically, it's attractive. When you look at this weekly chart, you can see that price is consolidating above the 100 exponential moving average. And this is just forming a very nice kind of tight trend line. I know it's got two touches on the weekly chart, and purely from a purely technical perspective, you might say, it's only three touches before it's a trend line. But through market experience, when you have just two touches like this on a big time frame chart and there's a big macro driver, that is enough to define your risk. You can see here on the monthly chart, this nearly Harami inside bar set up on the monthly chart, holding above that 100 exponential moving average. So it'd be very prudent to look for a potential break of this level. You could even argue there's three touches there anyway, thereabouts. It's certainly a very relevant level. And so what you can watch for is a breakout of this level on volume. And then if it's broken out by the time this video is published, then what can be looked for is a breakout, then a retest of that level on falling volume. So you look for a breakout on rising volume, pullback on falling volume, and then look for a potential continuation. Stops could be, limited very nicely, sort of underneath that 550 region. Remember, don't just trade it. Seasonax it. Sign up here at Seasonax for literally thousands more seasonal insights that are just waiting to be revealed.